Hello and welcome to Hot Commodities, and the gold monetization special show is what we have for you today. I'm Anisha Gupta and the headlines on the show are: the cabinet approved the gold monetization scheme. People can deposit up to a minimum of 30 grams of gold with banks for at least a year and earn interest on it. Remember, the move aims to reduce the country's reliance on import of gold and to utilize idle gold with individuals and institutions. And the cabinet nod for the gold monetization scheme is a reason for consumers like you and me to cheer. The two advantages certainly are predetermined interest rates and as well as no worry of theft and loss. The cabinet also today cleared the gold bond scheme. Under this scheme, Indians can now invest in gold bonds rather than purchase physical gold. The gold bond scheme will have an annual cap of 500 grams per person, and such bonds would be issued for a period of 5 to 7 years. Let's first begin with discussing how the gold monetization scheme works. We have with us Sanjeev Agarwal, who is CEO, Gitanjali Group. We also are joined by Som Sundaram PR, who is MD, World Gold Council, to discuss the long-term as well as immediate impact of these decisions. First of all, take a look at the gold prices. They have declined quite a bit. So if you and me have gold lying which we've bought at a higher level, we can always go to the assaying centers, to the bank, deposit this gold. It would be tested for purity, and this certificate that the testing center gives you will be then taken to the bank, and that is when you can open a gold saving account. Not only will the gold be free of theft and loss, but you will also earn an interest on it, which the gold otherwise does not give you. So let's start with you first. And what's your sense? Because we talked about the draft proposal when the government came out with it, and the final words today pretty much match what we've already talked about. But having seen it in its final avatar today, what's your sense on how much will the Indian population really go for it?
Manisha, this is again, I would say the draft, the policy is in final shape. The circular detailing the operational aspects will need to come from the Reserve Bank of India. So I think we still have another step to go before we know what the scheme looks like. But as we read this policy, I think we had all expected this to be closer to the draft policy. They have taken some of the inputs that have been given by the various stakeholders, and I think it's a very practical approach. They have enlarged the group of people who will be involved, and it is also now talking about the usage of coin in various other ways. So I think it reflects the good points of the draft policy and has included some inputs. So it looks good.
So what about the infrastructure? Because that is one thing that has been a concern. We have been talking about it on how India really lacks that. If we really had to go out with that gold and get it tested and then go, of course, to the bank, do you think that is one thing that could really hinder the growth here?
Well, as I have always been saying, we should expect this scheme to pick up very slowly. At the moment, for the first time, the policy includes the assaying centers, and they have left it to the banks to test and include the assaying centers as they deem fit. So slowly this will expand. Assaying centers will obviously step up as well. They see a good business opportunity here. We will certainly have to expand the infrastructure. At the moment, as you say, certainly it's not the best, but I think it's workable. We need to keep the expectations from the scheme in the initial stages realistic, and for that I think the infrastructure is good.
Well, let's also hear out the Secretary, Department of Economic Affairs, Shaktikanta Das, who expects both the schemes to get good response. He explains the scheme internals and tax treatment of the same.
With regard to gold monetization scheme, the tax benefits which are available as per the gold deposit scheme of 1999, the same tax benefits will be available. In the case of gold bonds, the facility of transferring the bonds before the maturity period, before the redemption, before it matures, the facility of transfer of the bond arises. So if I transfer my bond in the 5th year or in the 3rd year, I am liable to pay capital gain tax. Or at the time of redemption also there is a capital gain, so it will be liable to capital gain tax. So the Department of Revenue has agreed that as a part of next year's budget exercise, it will consider providing the benefit it will, the Income Tax Act will be suitably amended. The Revenue Department has agreed to consider to provide indexation benefit with regard to transfer of gold bonds, and with regard to capital gain arising at the time of redemption. The Revenue Department has also agreed to consider and make necessary provisions for providing capital gain exemption from long-term capital gain tax at the time of redemption of the bonds.
All right, so the gold monetization scheme taxation stays the same. It is about the gold sovereign bond scheme is where we are looking at capital gains tax coming in. So what's your sense on that? Is that a dampener? Does that really hinder yet again the whole process?
I think till the clarity comes, the people would want, the bond queries will remain. But as it has been made clear that in the budget, this would probably be one of the changes that would come through. I think between now and the budget, if the paper is launched, I don't see much of an issue here.
Let's also get in a view from Rajesh Khosla. He's MD MMTC PAMP and he joins us in Delhi. Mr. Khosla, hi, welcome and thank you so much for being part of the show. What's your sense? Capital gain tax, initial thing about the whole thing was that there wouldn't be any taxes here. Obviously, when you go and buy physical gold into the market, as the minister himself also was saying, it's all cash dealings. We actually don't end up paying any wealth tax or capital gain tax here. But when it's happening in paper, when it's a paper from RBI, nonetheless, this is something that the markets would watch out for.
I think that they will re-examine this issue because, as you rightly said, when you're buying and selling gold, the issue does not really emerge. When you look at somebody that's monetizing gold or somebody that's doing a gold deposit, you do not expect to be taxed on capital gains. Because gold is treated like a currency and there is no capital gains on currency. So I think there will be a revisit to this aspect.
Fair point. Sanjeev, getting you in the conversation as well. We've discussed the positives and the flip side of this scheme for a long time now. We have seen the final draft coming in today. The ministers have been pitching the scheme since morning. What's your sense on how much of the Indian population is ready to take part into this?
Well, it's a step in the right direction. After 16 years of sleeping on what was called the gold GDS or the gold deposit scheme, which was initially launched in 1999, at least the government at present has seen there's an opportunity to revamp it, improve on it, and come up with a new version of it. So that's very, very positive. Also, if you look at elements as far as what you were discussing a little while back on capital gains tax, as far as the gold bonds are concerned, it clearly states that it will become capital tax neutral, capital gains tax neutral. They're working on giving the benefit of the fact that in the coming budget, they will announce that the maturity proceeds of this will be capital gains tax neutral. At the same time, they're also talking about giving indexation benefit if somebody wants to premature liquidate the scheme. Both the schemes put together are targeting two elements of gold investments that we Indians are known for. One is the physical bars and coins, where, like I've mentioned on your channel before, the quantum of investment demand has jumped up to almost double of what it used to be traditionally at about 100 to 150 tons. It's moved up to 300 tons plus over the last 4 years, annual consumption of 300 plus tons, which is very large. And in that context, if some of that physical demand gets channelized into the gold bonds that the government is proposing, it will be a step in the positive direction, and that's what the intention is. The second element is the holding of 22 to 24,000 tons of physical gold. Like I mentioned a little while back,
isn't the number much higher from there? Because 22,000 is something we've been saying for the last decade.
I agree. But let's take a conservative figure also. And if you're talking about even 0.5% of that coming on board, that's a significant 120 tons plus. So both of the steps in the right direction. There are few elements to be ironed out in terms of, as far as the bond is concerned, what is the interest? Is the interest exempt from taxation or not? As far as GDS, it's anyway exempt from interest, is exempt from taxation. There are issues about if it is inherited gold, which you've got through 2 or 3 generations, Will there be any questions asked when you deposit that into the gold savings account? So there are a few open-ended questions. The government is aware of it. And the most important aspect is when the government has come out with these two policies, it's had a dialogue with the industry bodies and various organizations relevant to the industry, and then come out with the scheme. So they're fully in the picture as to what the issues might be going forward.
Fair point that. Soma, I want to come to you on the fact that Indians prefer to hold gold in the physical form, while of course, it has a cultural impact to it also. The other thing really is about the lower rate of interest. That is a feedback that most of the industry participants, institutions and HNIs have been giving out.
Yeah, two things. Yes, the physical gold part. A bulk of the consumers would like to hold physical. But there is a section of the market, as we have always seen, increase the consumer choices when it comes to gold. So to that extent, the sovereign bond, it's not going to be a huge issue. The government has already said in an earlier statement that they are going to limit this. It's going to be part of the government borrowing in any case. So it is going to be a certain amount, a limited quantity, and it will address the needs of specific HNI customers. So to that extent, I think it's good. It increases the consumer choice. Now coming back to what is going to be the interest rate, again this scheme has to be marketed well. As we have said, whether it is 1% or 2%, people have to be told that this is 2% in gold terms. Now you don't get 1.82, you get only 1.82% on a dollar deposit, and gold is a dollar asset. So comparing this rate of interest with the the term deposit interest will not be right. So when we market the scheme also, we have to market it very carefully. I don't think a 1.5 or a 2, that range of interest, we don't know what it is, it could be higher, is a dampener, because that's what you get on a dollar deposit. So why should it be any different for gold? So the question is, it is making it a productive asset, and you are getting it in gold terms. So if the gold price goes up, you get that much more. So I don't see that as a big, so there have been lots of questions about taxation, about interest rates. That's why I have always maintained that the scheme has to be marketed very, very well by the banks. I don't see that as a dampener, an interest of that range, because it is a dollar interest.
Fair point. That is very well noted. Sanjeev, you wanted to add to that?
Yeah, one, definitely as far as returns are concerned, it has to be put into perspective. Over the last 10 years, I think the Indian household and Indian savers are looking at their investments very differently. They're talking about asset allocation, which they never spoke about 10 years back. And gold forms an integral part of its asset allocation across diversified assets. So that's where the value comes in. Whenever there's volatility in the equity markets, there's a hedge as far as gold is concerned. The second point is gold is an inflation hedge, and a currency hedge. Gold is the only alternative an Indian household has to invest in alternate to the rupee. So to that extent, there's a value investing in gold. The third point is, as far as returns is concerned, internationally the returns on gold is at this point in time less than 0.5%, and hence 2% returns is excellent. Also, the gold, if I was buying gold today as part of my asset allocation, I would be required to take the money out from my bank account, go to a jeweler, buy some coins and keep it in the locker and pay for the locker facility. Here, I'm getting all that by without paying the locker facility and incrementally getting 2% and getting a tax exemption. So it's a win-win to that extent. The most critical point to make this product a success, both these products a success, is an active involvement of the Indian banking sector. If they are not actively involved and they are not sufficiently induced to market this, it will not go forward. One of the recommendations that we had made out of FICCI Gems and Jewellery Committee is that the banks be allowed to treat the lending of the gold collected under the scheme to the jeweler as part of its priority sector lending. So to that extent, if it's done in the proper manner, the banks are incentivized enough to push this product, it can be a success.
Fair point. As Som was also pointing out, we still are waiting for those final notifications. Between now and October, November, when the scheme actually comes in, there would be some statement that you would see coming in from RBI as well, and that perhaps will incorporate all of that. So gold is a wealth, gold is an alternative currency as well, and now the government is giving us a very strongly banked instrument as well to put in case of gold. But we'll talk about more of that after this very short break.